Aloha, I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. Now we get this question a lot, so I'm going to address it here. And this is about, does policy loan interest go to my cash value? And how do policy loans affect my cash value? Most of the things I've read about the infinite banking concept seem to say that the interest you pay on your policy loans goes directly into your cash value of your policy. But that's misleading. And we have another video here addressing that specific issue. But in this video, we'll explain how the policy loans work and what happens with the loan interest you pay and how you benefit from it. First, the direct answer to the question, does policy loan interest go to the cash value of my policy? The answer is yes and no. Indirectly, yes, because policy loans are not actually being drawn from your cash value. The cash value in your account serves as collateral for the loans. The insurance company is the one funding your loans. That money comes from their general account, which they use for investing and growing their assets. Here's a chart that breaks down the investment portfolio of our favorite provider. You can see from the chart that the company invests in policy loans. And of course, investments are made with the hope of producing a profit or gain on the money invested. So as with all loans, interest is charged. And that interest is paid to the provider of the loan, in this case, the insurance company. So the interest you pay for your policy loans goes directly to the insurance company that provides and funds the loans. Your entire cash value remains intact within your policy. And if your policy is with the right company, your cash value continues to earn dividend interest even while you have an unpaid loan with the company. But you do benefit when you pay the interest on your policy loans to the company. And here's how. Again, it's only the mutual companies that offer the participating whole life policies. With a mutual company, when you buy a participating whole life policy, you become a shareholder in the company, and that's why you receive dividends. Dividends are paid based on the profits of the company. So when you pay the interest on your policy loans, you are contributing to the profits of the company. As those profits are shared with you, a shareholder in the company, by means of the dividends that they pay to your account, the interest you paid to the company, along with the interest paid by all the other policyholders on their policy loans, and gains generated by all the other investments the company engages in, does get paid into your account. And that's how you are benefited by the interest you pay on your policy loans to the company. But no, the interest you pay on your policy loans does not go directly into your cash value. It goes directly to the insurance company and then indirectly back to you by way of the dividends that you receive from the profits of the company. I hope that's clear and well understood. And now, the other question closely related to that is, how do policy loans affect my cash value? Taking policy loans does not accelerate your cash value growth. And if your policy is with the right company, neither do policy loans slow down your cash value growth. So when we say the right company, we mean a mutual company with a non-direct recognition policy for policy loans. We have another video explaining directly what direct and non-direct recognition means. It's here on this channel. So for more on that subject, please watch that video. And that being understood, let me just reiterate that when you take a policy loan, it is the insurance company that is providing and funding the loan. Your cash value is untouched. So all your cash value remains in your account and growing with the compounding dividend interest. So in that absolute sense, your cash value isn't affected at all, good or bad, by your taking policy loans. However, your cash value is being used as collateral for your loans. As a result of that, whatever amount is being collateralized will not be available for withdrawal, which you generally do not want to do anyway, and neither will it be available as collateral for additional loans until the previous loan is paid back. So for example, if you have $10,000 in cash value in your account and you take a policy loan for $5,000, all 10,000 of your cash value remains in your account and growing. But you would then only have 5,000 remaining to use as collateral for any additional loans until you repay the first $5,000 loan back. So again, the only effect policy loans have on your cash value account is that it is held as collateral for the policy loans. At SCFSIC, we love helping people with an infinite banking tax-free cash growth warehouse finance strategy. So please post your questions and comments here and we will answer them. Also, if you haven't yet watched our free webinar, How to Become Master of Your Financial World, click the link in the description box below this video. At the end of that webinar, you will be invited to apply to become one of our clients. You may also email us or call us at the address and phone number listed below in the description box. We look forward to helping you. For now, aloha and mahalo for watching.